the first show of 2023. Happy New Year, everyone. I know I'm a little late, but again, it's never a late time to say Happy New Year. Let me tell you that I'm so excited about today's show. In Great Company brings you experts, business owners, entrepreneurs to share their experiences, advice, tools to help you grow in business. And today, I have a good friend of mine who is also a CPA and has his own practice, Ben Ofori. I'm so excited to have him here and talk about some of the tax questions that we get on a regular basis from his clients and my clients. And as a CPA myself and as an owner of my accounting practice, Fabric, I get these questions all the time. Now, we couldn't bring all of them, thousands of questions via email, phone, text, but we're going to go over what we consider are the most frequently asked questions. So today's show, Tax Chat, solutions to the most common business tax questions. We're leaving the personal ones out. It's going to be full of stories and advice and fun, I hope, with my friend Ben. Welcome, Ben. And Ben is a CPA, as I mentioned, and the principal at Karpos and Associates. Ben, tell us a little bit about yourself, and thank you so much for being here today.
Thank you, Ramona, for having me. So yes, I am the founder and principal of Karpos and Associates. We've been around probably for about 8 years now. Prior to that, I worked for different firms in both in public accounting and in finance on Wall Street. Probably have about 20 years of experience providing accounting and tax advisory services, and of course, audit assurance advisory services to various small businesses, individuals, families, and so on and so forth. So yeah, I'm happy to be here, and let's get it going. I'm excited.
Sure, but before we do that, I do want to tell our audience how I met you. So Ben and I started our practices around the same time. It was about 7 years ago. I went to Baruch for a tax seminar. It was an all-day seminar with lots of great speakers, and there was Ben. And we talked at some point during one of the breaks, and he was starting his practice. I was starting my practice, and we had all the concerns and all the excitement that new business owners have. And we have been friends since. We talk regularly, and we share notes on tax issues. So to have him here today is so great, because this is kind of it's a formal environment, but it's not structured. I'm not sure it's going to be very casual as we discuss during C and I interact on a regular basis, but usually I'm on the phone talking to him, and it's not on the show. But
we'll try and keep it professional for our audience today.
We won't tell any gossips about any of our clients. We won't complain about clients or staff. None of that.
No, totally.
Ben, yes, let's get started. I think some of the questions that we get are very similar. We work with similar clients. We work with partnerships, business S corps and C corps and business owners that have any type of these entities, and a lot of the questions that we get are going to be very similar.
Yeah.
Do you want to start?
Yeah, sure, of course. You can take this one. This is a very common one that we get. It's from business owners asking how much they should pay themselves as the owner of an S corp. That's a very common question you and I get, and we talk about quite often. So if a business owner is listening and they are wondering how much they should pay themselves as reasonable compensation for an S corp, what would you say?
It depends.
Exactly. Great answer.
It depends. Yes, it's there are many ways to determine what reasonable compensation as the owner of an S corp is. As an S corp owner, you are required to be on payroll and pay yourself what the IRS would consider a reasonable compensation. And if the business is growing, it's making a lot of generating a large profit, I recommend using some more sophisticated calculation software to come up with what is reasonable compensation, or just to go with market rates for your role. if your company can afford to pay what you would pay someone else in your position, then that should be what you pay yourself through payroll. When the company is smaller and the profits are, maybe 70,000, 100,000, and that's a lot less than what a salary would be for that role, then it's a little more challenging. So what I tell my clients at that point is, let's pay something that the company can afford, keeping in mind that you need to leave some money in the company to reinvest, to hire, to pay for expenses. So I usually suggest at that point maybe paying yourself between 60 and 70% of the net of the profits that the company has before your salaries. But again, all of these answers have to be considered in combination with other factors within your tax situation and your company. And I'll also, Ben, if you have anything else to add
Yeah,
to that.
no, I agree. I agree with what Ramona just shared. A lot of these are going to be case by case, and it depends. Um, I always tell my clients, not all CEOs are created the same. A CEO managing $100 million revenue company would take a slightly different salary from, for instance, a small business that's starting out barely paying their bills. So, in times like this, having a conversation with either Ramona or myself would be helpful. And we can certainly point you to some resources that would help you determine how much is appropriate to pay yourself. So that's a great answer, actually. Now,
Yeah.
there's this other question that also comes up a lot as to whether folks need to pay estimated taxes on distributions. Do and you might want to take it from an S corp's perspective and a C corp's perspective, because I know you handle both. So,
Yes, yes. So for a C corp, the generally the founders don't take distributions because those would be considered dividends. They would be taxed as used, based on capital gain taxes, tax rates. And so the founders of C corps generally just pay themselves reasonable salaries. But as an S corp, and LLC maybe. I think I get
yeah,
this question from single member LLC owners, from partnership owners or members. As an S corp, if or LLC, you are required to pay estimated taxes based on the net income before any distributions. So if your company, to give an example, if your company is an LLC and it has um, partnership or a single member LLC and it has net income of $100,000 and you take a distribution of 50,000, you still pay estimated taxes on 100,000. Whatever you take or don't take is irrelevant to paying estimated taxes. And the same thing goes with the S corp. The only difference with the S corp is that the net income is after your salary, the salary that you put through payroll. Now, the net income on the S corp is subject to estimated tax payments. Both an LLC and an S corp estimated tax payments are at the personal level. So your estimated tax payments are going to be calculated at your personal tax rate, paid under your personal tax ID number, not the company. The only exception is if the S corp or the LLC have a tax responsibility with a state or city. So that's separate. For example, in New York City, the S corps have a tax that they need to pay to New York City, and you need to pay that separately from federal and state income taxes paid at the personal level. Lots of information here. This
yeah,
is this is this is what we talk about in a tax planning meeting. I'm sure Ben, you do this with our clients that take 1 hour.
yeah.
But hopefully, we give you a lot to think about and start doing some research and talking to a tax professional.
I agree. And there's a lot of confusion around this estimated taxes when it comes to S corp owners. I've had clients pay estimated taxes at the entity level, and S corps don't pay federal income taxes. Unless you're in some jurisdiction like New York City, taxes S corps, or some other states may tax S corps. But at the federal level, S corps don't pay estimated taxes. So I've had people mistakenly pay federal estimated taxes at the entity level. And Ramona makes a very good point. Uh, all estimated taxes for your federal income tax on your S corp income must go through your personal tax ID and personal income tax. So that's a great point you make over there. Now, this other question we get a lot. So this person emailed and said they have employees in multiple states now. Do they have to pay file income tax return in each state? So they have employees
Yeah.
in, it's very common in the tri-state area, New York, Connecticut, New Jersey. So you have people crossing over from New Jersey to New York to work and vice versa, and from Connecticut to New York and so on and so forth. Do they have to pay or file income tax for each of these states if they have employees living in?
Yes, with the change now, the trend in employee being hired from any state now, or employees moving around, this is a question that we get a lot. And again, every business and business owner will have to look at their specific situation. Is the employee living in that state for just a month? Are they moving back to the state? So there are so many factors that we need to consider. But in general, states are going to claim taxes on net income generated in their states if you have employees or an office location or assets in that state. And then, of course, you would consider whether there is a loss being generated from that revenue in the state, whether it's worth doing the tax filing or not. What are the special requirements from the state? Some states say you have to file a return even if you are not generating any profits, right? So you want to make sure that you are complying with the requirements of each state and keeping up with them, because later on, when you do need to do something in that state, the profits are so massive that you need to file. You will then have to deal with what you didn't do in the past, and then the penalties and fixing that issue are not worth it.
I agree. I agree. And this is also one thing. Each state's going to be slightly different, right? Even places like New York, Connecticut, New Jersey, you'll be surprised some of the differences you see across state lines when it comes to income tax filing obligations. So I
Yes.
agree with that
Yep.
answer, Ramona. Um, what are the multiple income tax filing my company and I are required to comply with? That's
You know,
also that's
go
also
ahead.
one that comes up a lot. Do you want to take a stab at it?
Oh, I get that a lot, and I'm like, I wish I just had like a cheat sheet that I could give for that fits everyone, right? But I'll let you take that one, Ben.
Yeah, yeah. So multiple income tax filings, my company and I are required to file. Um, so again, it goes back to the whole uh, depending on the type of business you are. So if you're an S corp, obviously you file at the entity level, right? And then you file at the personal level. So we're looking at the 1120S. We're also looking at the 1040 that you file at the personal level, and then of course the various state equivalents of these forms. Now, different states may require different filing obligations. So, for instance, if you're in New York, you'd also be required to file like a franchise tax payment, make a franchise tax payment based on your gross receipts, right? So again, this is one of those things we'd have to look at on case by case basis. Uh, Specific to the particular jurisdiction you operate in, and determine what filing obligations you have. Yeah.
Yes, and in addition to that, we're not talking about sales taxes and payroll tax filings, and if you're registered a corporation or an LLC in a different state, Delaware is common. You may have specific requirements there that are not income tax related. There is also something similar in some of the counties and cities in California, where you have to file additional forms and franchise tax returns, like Ben mentioned, we have in New York. So definitely it's not a one size fits all. It's based on the business and where it's registered, how the business is structured. In general, you will have, as an S corp, a partnership, or C corp, the company will still have to file a federal income tax return and a state income tax return at a minimum, one state. The business owner will have to file federal and state income tax returns, and then there might be other forms related to localities or other states where you do business. I want to ask you questions, Ben, because I have been on the hot seat this whole time.
No,
Let's
of course. Let's go for it.
I
Go
want
for
to
it.
ask you
Yeah.
some questions.
Yeah.
And thank you. And I love the fact that we have similar experiences and we can share what we the type of questions that we get and also the answers that we give. But you and I talk in the past, on a regular basis. I know that you have been working with a group of clients or taxpayers that we refer to as locum tenants. What are locum tenants, and what do they, how do they differ from someone who owns a practice?
Great question. So yeah, this is a group of people that we do quite a bit of work with. So we like to say that we specialize in that industry because we work with quite a bit of individuals who fit that category. So locum tenants are pretty much physicians who practice as independent contractors. Oftentimes they move from state to state, facility to facility, and so they get paid basically as independent contractors, right? So that pretty much has 1099 consequences and also multi-state tax consequences in a lot of cases. And that's pretty much their world. And that those are the group of people we've done quite a bit of work with, and we still we continue to do quite some work with this group of people.
I imagine they get a lot of 1099s. As you work with them, do you ask them to provide all the 1099s or kind of a profit and loss statement that's my own question. I just thought of that. Like,
Yes, yes.
yes, how does that
So
work?
they do, and let's go back to what we had said earlier on. That depends on the structure they operate, right? So if they operate as sole proprietors, yes, we want to corroborate whatever financial information they give us with various 1099s they receive from the various facilities they work with. And that's the only way we can make sure that one, they are not missing out on any compliance issues. For instance, if they have to file for a particular state, they're not missing out on that or any related deadline that's associated with that. But more importantly, we want to make sure that we count every income they've earned so it doesn't come back to bite them. You know how the IRS does with some of these things. Uh, you might get
And we love
a
that.
where that you haven't considered. So we do that, especially if they are sole proprietors. Now, if they are S corps, chances are they are running like a regular small business, paying themselves a reasonable compensation. Some bookkeeper or accountant is reconciling their books every month. And so we'll take all that information and again, take a look at any 1099s they receive just to firm things up a bit before we plunge into any tax advisory work with this group of people.
Are there any benefits of creating an LLC as a 1099 locum tenants contractor
Yes,
instead of, yes, continue to be a freelancer?
yes, a lot of benefits. Again, similar to most other businesses, right? Creating an LLC obviously provides that legal protection you need from liability standpoint, and additionally, it allows you to take advantage of the various deductions that exist for small business owners, right? So yes, there's enormous benefits associated with creating an LLC, as opposed to using your own name and tax ID to work a lot of these gigs.
But as 1099 contractors, are there still credits and deductions that are exclusively available to them? Any other benefits or strategies that you recommend locum tenens providers as your
Yes,
advisor?
there's a ton. There's a ton. One big one is retirement. So there's various retirement um, options available to them, right? And we can delve into things like solo 401k, SEP IRAs, and many other retirement options that are available to this group of people. Then the biggest one, the other big one is travel and reimbursements. So there's a ton of reimbursements. Depending on how, again, they are structured, we have reimbursements for travel, per diems, reimbursement for home office deductions, etc. And then, of course, if they are sole proprietors, they can take advantage of various home office deductions that are available to them. So yes, there's a ton of benefits uh, to this group of people.
That's a good point. It's good that you advise them and that you're talking about these deductions and credits that are available to 1099 contractors, because sometimes 1099 contractors don't believe that if they don't have an entity formally established, that they don't get some of the tax deductions that a business that's formed as an LLC or as corporate get. But they do get a lot of the same business deductions,
Yes.
most of them. Now, a lot of people feel overwhelmed come tax season. We do, but we got it. We got it under control, right? And they don't know when to start. Is there anything you offer to help make the process easier?
Yeah, no, I say if anybody is in a state of panic, just call us. Call Ramona or myself. No, on a more serious note, if somebody is just wondering what to do, what the next steps are, um, you know, just speak to one of us. I think we both have some form of complimentary consultations we offer to clients who fits our client profile. So if anybody is just wondering, like, who can I talk to about this tax situation? That's what we are here for. Just shoot us an email or call us, and we'll be happy to respond back with some help. Like our firm, for instance, we have different packages, tax packages we offer to people in that category. So we offer the silver, the gold, and platinum packages that will help alleviate a lot of the headache to many of these practitioners. So yeah, I really mean it when I say to call us.
Yes, call Ben. Call Ben. He'll pick up the
Yes.
phone faster than I will pick up the phone. No, you can call any of us. For me, I like to get emails so I can manage my time better. But I know that sometimes picking up the phone and texting it's solves the problem faster. And I'm just moving all over the place all day long, like with the team and meetings and training and webinars like this and events like this. But definitely reach out. The other thing I can advise our viewers to do is to get everything organized before you call your tax advisor, before you reach out to your potentially future tax advisor. There are some things you can do to make the process easier. Just if you have been filing taxes for the last few years, you're probably familiar with a lot of the things that you're going to need to discuss with your new tax provider or your existing one. What are your sources of income? Do you have all the forms that support that income? If it's a business, are your financial statements up to date? Do you have your home office deduction measurements, or calculations ready? So a lot of things that you can get ready to have an easier conversation with your tax advisor.
Totally. Ramona, I'm gonna flip this question back to you because
Yes.
it's a question we get a lot of. I find it interesting. I kind of have an idea what you're gonna say, and this is a question about what deductions are available to business owners. What deductions are available? So, what can they claim as a tax deduction on their business income tax return?
I find this question funny when I get it, and no offense to anyone. I love all of you customers. You know that I do. But when I get the question sometimes, and not necessarily from my existing clients because they have already worked with me, but as a new business owner, sometimes they are overwhelmed, like we mentioned before, with the tax season or just starting a business. And they would ask me, what can I deduct? What expenses can I include in my tax return? And the first thought that comes to mind is, we cannot make up expenses, right?
Yeah.
Like, what, there is no choice. It's not like, oh yes, I can take a deduction, but I never had that as an expense in the business. Sometimes the question comes across that way, and
Hmm.
I warn my clients not to think of it that way, because it sounds like I'm just going to pull expenses from somewhere that doesn't exist. So that aside, business expenses are deductible for tax purposes if they are necessary for you to run your business. They must be reasonable, a reasonable expense for the type of business that you own and for the industry that you're in, and it must be necessary. So reasonable is, if I need to drive to see my client every day, I need that expense. Um, it's a necessary expense for me to go see my clients, assuming transportation, local public transportation is not very easy to access. So that's a necessary expense for me to run the business. What makes it reasonable is that I use a normal, an average car, that I'm
Yeah.
not buying a Porsche to buy to go to my clients, right? Or that I'm not flying there or taking a boat. That will make it unreasonable. So any expense, a laptop that you need to run your business, you need to rent an office space to have a meeting with your client, marketing materials, all of those expenses are deductible for tax purposes. When it comes to meals, there are a few exceptions, and these are meals to with the client, travel meals. There are some exceptions there. Some of it will be deductible and some not. And training, professional development to help you do better in your business could be deductible too. What about you, Ben?
Yeah, no, I agree. I agree. I think just to add to that, so you make very important point that it has to be reasonable, right? It has to be. I think that the uh, term that the IRS uses, it has to be ordinary and necessary in
Yes.
your line of business. So what may be ordinary and necessary for one line of business will be not ordinary and necessary in your line of business. So you might find someone. I have a client who takes trips to Disney as part of the company they run for training purposes, and that trips to Disney is ordinary and necessary in their line of business. For some, it may not be ordinary and necessary. So again, it's one important reason why you want to be talking to a professional who can uh, walk you through what is ordinary and necessary in your line of business. But yeah, we get that a lot. I actually got that question last week at a networking event. We were hanging out, networking, talking amongst each other, and then when folks hear you're a CPA, somebody just stepped up and said, "Hey, what can I deduct for my freelancing business? I do this, I do that," and it's not the same for everyone. What might be ordinary and necessary for me might not be ordinary and necessary for you. But yes, there's plenty of opportunities to take deductions out there. So
Yes, definitely. Like, someone who is not in the business of doing taxes, right, or preparing taxes, should not be buying tax software for, unless they're doing their own taxes, right? That's a simple
yes,
example, but there are a lot out there that, like, I can justify training on, I don't know, dancing. Like, how does that benefit? Well, maybe it benefits my business in some way.
marketing, maybe taking ballet lessons might present you differently to your clients. I don't know.
That's part of my wellness
Yes,
program. Okay,
exactly, exactly.
not to say that wellness is deductible. We're not saying that. Okay.
Yeah, yeah. No, I think I
um,
think people get where we are going with that. It's you have to be very careful because what might work, and oftentimes folks speak to friends and they tell them all kinds of stuff. My friend said I could deduct this because I have a business. Well, you know, it depends. Back to your point, right? If it may be deductible for them, but maybe not necessarily for you. So something that people need to be aware of.
exactly. So we're gonna be ending in a few minutes, but I think it's worth asking a couple more questions because I have two that I think are quite, all of them are important, but
Sure.
two that I want to ask them. So one is, sometimes we have clients that are still employed, they have a corporate job, and they're studying, they're doing something on the side as a contractor, or they're starting their business slowly. What type of retirement plans are available to a 1099 contractor if they also have a 401k through their employer? I get that question sometimes.
Yes. So if they own their own business, then they can look into things like the SEP IRA. If they already are in an employer provided 401k, then they won't be able to start another 401k because there's the annual limit, right? For 2023, you can only uh, uh, defer 22,000, about 22,500 or so. But what they can do is through their small business or self-employment, they can also defer part of their net income through what we call a SEP IRA. Depending on their income, they will be able to do things like a Roth IRA as well. These are all things it's also case by case basis, right? A lot of it have income thresholds that would need to be examined. And so once we talk to the individual, we get a sense of what their profile looks like.
Yes.
We are better able to recommend things they can do. Did you also ask about like what they can do for cash flow purposes, general investments, or just retirement?
Just retirement, yes. But if you want to add about general investment, I usually
No, no, no. Because I get that a lot, especially from my locums providers. I know a lot of folks also go into real estate investments, rental property. Those are also great areas. While they provide decent cash flows, they also provide enormous tax benefits to people who are considered real estate professionals. And then, of course, investing, right? Again, besides getting that passive income from investments, we all know that capital gains have slightly attractive income tax rates compared to earned income. And so these are all stuff that we talk to clients and prospects about. Yeah.
yes.
Yeah. So,
There is so much to talk about when it comes to taxes. Oh my gosh, we could do this for a whole week and we will never cover everything. So
yeah.
right? Before we go, let's give our viewers some upcoming deadlines. So to remind them of what to expect in the next few months, you can start and then I'll chime in with some that maybe you don't mention.
So today, I guess payroll filings are due today, January 31st. Then, of course, we have partnership and S corps coming due. That will be the next due major deadline, March 15th. And then, of course, we have our good old April 15th deadline for individuals and C corps. And I'm not
Yes.
sure if I'm missing anything. But by the way, you can find there are resources on our websites that provide all these timelines for you when things are coming due and stuff like that. So you can either check out Ramona's website or our website for a lot of these resources.
But please share your website, Ben, so
Yeah.
that
So we are karposandassociates.com. We're also on all social media platforms. We're on LinkedIn, Facebook, Instagram. You can find us on there. And yeah, you know, say hi, talk to us. We are open and ready to answer any questions you may have.
yes, definitely connected, Ben. Once the show is over, this is going to be posted on LinkedIn. If you're watching on LinkedIn after, you can find Ben tagged on the post or in the comments. You can connect with him. He's a great person to have in your network. And related to the deadlines, today is also the due date to issue 1099s, Form 1099s to your vendors. So the vendors that are eligible, I'm not going to go through all the requirements, but if you believe you are required to issue Forms 1099s, you have a few hours to do that. And I do have a few clients or several clients that also have the deadline of March 1st for Delaware franchise tax reports. That's another pressing one coming up. And of course, the March 15, like Ben said, for S Corps and partnerships. and April 15th for personal and C Corp returns. I know, Ben, I believe you also handle nonprofits and
Yeah,
trust tax filings. Any specific deadlines about
I
those
think
for those?
those are in May 15th. So
Okay.
we work year round basically. And then of course extended tax return, we have the September 15th, October 15th, and yeah.
And everything in between, right?
Yeah, yeah, it's a lot of fun. So yeah, no, this was great. We should definitely do this more often.
Definitely. If you guys want and girls want to see more of these tax chats, please let us know in the comments, and Ben and I will organize another one. Thanks everyone for listening, for watching, and let us know what you thought. And please, I see some comments, but thank you, thank you. I see some responses or some comments here in the chat. No questions, but thanks everyone who listened, and we'll be back in February with another In Great Company. Follow us so that you can get the notification, and send us your feedback about topics that you want to hear about or experts that you would like to see on the show. Thank you, Ben. This was great. I felt like I was chatting with you in your office or my office or over coffee. So really appreciate your time during this busy season, and look forward to having you again.
Likewise, likewise. Take care, Ramona.
You too, Ben. And thanks everyone. Please check in with us and follow us and send us your questions or comments. I'll see you soon, hopefully somewhere, but you'll see me